Hey guys, Mike here. So this will be a video I'll probably stumble through because it wasn't planned and I just get a lot of questions about it, and today I said, why not? Let's just do it. And a lot of people say, Mike, what are you doing? Or what do you think people should be doing out there or whatever when it comes to investing and things like that? And I don't give investment advice, right? I give research I find, stuff like that. But, I can tell you what I'm doing right now. And then, of course, in the comments, because we're a community here, you can share what you're doing, right? And ideas for stuff. As I go through this, you'll see. And like the number one thing right now for me is capital preservation, capital build up, and then deploying that capital responsibly, which we'll get into the last part of that in a minute. After that, number two is a very close number one, and kind of tied in together, is researching like crazy, learning, trying to learn as much as I can. Right, about bear markets, turnarounds, bear market rallies, all this stuff. What stocks turn around the first? When do they turn around? The Fed, and learn everything I can about the Fed because, in my lifetime, really they've only tightened once in 2018, right? Maybe they did a little bit in 2012. Nothing like this though. Learning about inflation, how it affects everything, because we ain't had it since the 70s. Sorry, I didn't live through that. My fault. And so just trying to learn, but also figure out a more effective way to dollar cost average into the stocks I want to be in, right? And so, that's two really important things. And I'm going to show you the basic things that you need to learn. Just learn. It doesn't take any time. It's free. Just learn it. And you will, your account would probably, it'll blow up. It'll look like it's blowing up because you're not just, think about it this way. Do you cook, drive, go to work, or do anything of that matter with a blindfold on? No. But for some odd reason, we got in our heads that there's some people that they'll just invest blindly because some YouTuber told them, or because they just woke up one day and said, yeah, Apple's looking pretty good. And they'll just buy Apple. No chart, they'll get nothing. They just say Apple, here we go. And it's like, okay, I don't know why when it comes to investment. And I know one reason why. And because for years, that's what people have done because they've been trained to do it. And we didn't have, as retail investors, a lot of stuff at our disposal we have now. Like we didn't have TradeView, Yahoo Charts, or any of the stuff that Fidelity or TD Ameritrade offers you. And it's all free. I mean, I think you can get a TradeView account for free. I do the bells and whistles just because of this, because that's what I like to do. But I think you can get a free account with them too, But you can do all these basic stuff I'm going to show you, and I'm telling you, your returns, there's no doubt. They can't be any worse. They're going to end up being better over the long haul. And, I want you to adopt a mentality, at least the mentality I'm adopting, starting off with capital, starting off with increasing my capital, and then capital preservation. And what am I doing? Inflation's high, right? So now all of a sudden we got expenses we didn't have before. So now, and what I get pissed off about, and it amazes me how calm people are about this, by the way, is we're basically, this is happening to us because our government is idiots. The feds are idiots. They screwed up, and now we're paying the price, right? What I mean by we're paying the price is any cent I got to spend at that pump or in that damn grocery store for the same thing I was spending a year, 2 years ago, 3 years ago. It's no different, and I'm getting nothing extra out of it, but I'm paying way more for it now. That cent is not going to my investment accounts, right? And it's a lot more than a cent, we know, right? All that money to be going to investment accounts is going towards the same crap I was buying a year ago, 2 years ago, 3 years ago. It ain't no better. The strawberries are the same, the apples taste the same, the gasoline's the same, but I'm paying, it feels like twice as much for it, okay? Because of some people that were just inept at their jobs and they kept them, okay? That's what I get aggravated about. But, so what am I trying to do in the meantime? So, okay, how can I make more money now to try to offset that to put in these accounts? Like, what's simple ways? What's free money? And I'll tell you simple. One thing I started doing, we used to use this for vacations, but now it's like credit cards, right? If you got a good rewards credit card or a couple of them that pay you really good rewards, make sure you have zero interest on these things for a long time. That money, I use it every quarter. I go in there and say, okay, I'm going to put that money towards paying whatever the statement balance is. That same amount is going to go from my checking account into my investment accounts, right? So now I am raising the capital that I have. All right. Now gas is expensive, right? And so, what's happening here? You can get something like Get Upside or any of these apps you can use where you get cash back at the pumps, at restaurants, anything like that. I know people, you see this and they laugh and they go, oh my God, you got to be kidding me. I mean, you're getting back what? And like for example, I think every time I fill up at the pump, I get back $1.50 to $2. My wife gets back about the same. We have smaller vehicles. If you got a bigger vehicle, you'll get back more. And I ask it simply this way. It's not a lot of money, but it's free. And there's no scam to it that I found, because you look across the street, that gas station, the exact same price. The one right up the street, exact same price for the gas. They're just not offering any cash back. And if you got out of your car and you walked around the pump, every time you walked around that pump and there was $1.50, let's say, sitting on the ground, you ain't gonna pick it up. You ain't gonna spend that. You ain't gonna look at what to do every single time you and your spouse or whoever's in your household got out and saw that. And then what happens? Now $1.50 becomes $3. $3 becomes $4.50. $4.50 becomes $6, and it just keeps accumulating over and over. We fill up at least once a week, if not more, depending on how much driving we're doing. And the mindset you need to have, and there's other things you can do, obviously, but the mindset you need to have is, go back to this question right here. I was asking a long time ago, and most people get this question wrong. And they were asked, would you want one penny that doubles every day for 30 days, or would you like $1 million up front? And most people are going to choose the $1 million. It makes sense, right? Because they're not going to sit there and do the math. But then when you do the math, you realize a penny that doubles every day for 30 days is $5.3 million, right? But to show you what compounding is, if you stop that compounding at 27 days, you only have $671,000. And don't forget to hit that like and subscribe button, guys, if you get something out of this. But the point I'm trying to make here is, whatever program you try to use, it's basically compounding, right? You didn't do anything to earn the money. It's passive income. And so let's say, people laugh about it, but all of a sudden you're getting let's say you start using the restaurants, you'll get even more cash back on something like that. Or your credit cards, if you get a good rewards type credit card, then that stuff is just compounding, right? You're just putting it in there every week, every single week, building up. Like I said, $1.50 becomes $3, $3 becomes $4.50, $4.50 becomes $6, and it just keeps rolling. And next thing you know, you're like, oh, all of a sudden now I got a couple more $100 to invest, or a couple $1,000 more to invest, or more than that. And it's passive income. You didn't do a dang thing to earn it. You have to go out and do any kind of real work, okay? And that's more important than ever right now. And so that has helped build your capital up. Helps build my capital up. And I have other things I do, but that's just what I do. If you got stuff out there you're thinking about, giving to charity and it's sellable, sell it. Sell it on eBay. Do something, to raise it up and just put it straight in your investment accounts. That's what we do, right? The other thing is, and this ties into education and how to distribute your capital, right? Instead of just putting a blindfold on and throwing a dart at a dartboard and hoping you're getting in some at the right time or whatever it is, there's ways to go about this. I'm talking about the simplest stuff. And one is, which I've started to do a lot more, and I was bad at it before, right? Because again, I'm educating myself too on certain things, is looking at charts that give you more of a longer view. So for example, the monthly chart. And I encourage you to make an alert either on the chart or in your phone or whatever you got to do to sit there and do this. But to look at the monthly chart of the indexes, certain stocks, all that stuff, and get this longer view. Because what you'll find out is you can find like gold on this thing. And what I mean by this is, like, this is the SPY, right? And you look at the S&P and you look down, and there's certain things you need to learn, like the MACD, the RSI, where you're oversold and all this stuff. If you just look at that, don't worry about the stochastic RSI at the bottom. Don't worry about that one. But if you looked at the MACD and rolled over and did what they call the death cross, do you see what's happened since? We've gone down on the S&P almost 15% since that happened. Okay, so and it happens not very often, as you say. If you go back to 2020 crash, you see the same thing. But the other one to look at is the RSI, the one right above it, right? And on the monthly, you'll see that this thing doesn't get very oversold very often. And as bad as the month's been, you see we're not oversold now, right? You got to go all the way back to 2008 to see where it was oversold. 14 years ago. Didn't get oversold in any other crash, just the monthly. And if you're not seeing the point here, let me just stop it and say this. If you ever see oversold on an index or a stock, which I'm going to show you how hard it is to find a stock that gets oversold in the monthly, it is a big green flashing light saying, buy me, buy me, buy me. This is the time you want to go in heavier than ever. Not advice to you. I'm saying this is what I do and what I will continue to do. Okay? Because it just doesn't come along very often. And I'm going to show you, I dug through so many charts for stocks trying to find you some that were oversold on just an individual stock on the monthly. And it ain't very often that it happens, okay? Prime example, I am pulling up Carnival Cruise Line because none of the FANG stock, which everybody knows all about, it's been around a long time, I could find actually oversold on the monthly. And if you look right here, which I'll show you one in a minute, Carnival Cruise Line, for example, look what happens every single time it gets oversold in the monthly, right? These don't look like big moves because this is a monthly chart. That right there is a 200% move up right there if you just bought it when it was oversold. Look at this right here. Oversold right here, right? What do we get? 325% move up in about a year and a half. Okay, and these are cruise stocks, for God's sake. These aren't tech stocks, right? So this is a cruise stock. And if we scroll back, you see back in the 80s and 90s, it never got oversold, right? Then we move over to Apple, and look at this. As bad a year as it's been, look what the RSI is on the monthly. I mean, it's barely moved down, right? That's what I'm talking about. These stocks are rarely get officially oversold. And you see right here, that looks oversold. It's not. It's not official oversold. The last time it officially was actually oversold was 1983. All right, and I know, again, this is a monthly chart. Doesn't look like huge moves. That right there is a 822% move right there in a matter of 335 days. And then if we move to the weekly, you can see right here, we're still not oversold. Even as bad a year as it's been, right? 2020 didn't get oversold. 2018 it did. And guess what? That was actually the bottom. It was right at the bottom, right? And so big move up from there. And so as you can see, just with simple things like looking at these charts on the monthly and the weekly to see where things are at. Look at what an RSI is. Look at what the MACD is doing. Just looking at simple things like that, you can continue to do your regular dollar cost average into the stocks for the long term. But when you hit moments like that, it's like just this golden opportunity has come along. And you're like, whoa, I was going to DCA in my lump sum 2 weeks from now. Look at this right here. And you might want to put a little more in. I mean, that's what I definitely do. I say lump sum type of moment right there where you go, oh, okay, is it going to be the bottom? Probably not, but boy, you know you're close to it when you're sitting there on that monthly and it gets oversold, or even the weeklies give you a great advantage to look at. And the other thing is dollar cost averaging on major moving averages. That's what a lot of people do. Because this is what a lot of people do, especially like a bull market, for example, right? Instead of just blindly buying dips, they'll look and say, okay, did it hit the 100? Did it hit the 150, the 200, the 300? And every stock does this differently, right? Apple tends to absolutely love the 150. As you can see, it bounced off it multiple times. But even if you just go on the 100, 150, every moving average it comes down to. And then when you end up going into what we are now, which is basically a bear market, then on the daily, it don't do any good, right? Because it's dropped all those moving averages. But if you go to the weekly, then you can look and study the chart and say, okay, in bear markets, this thing right here really does drop. But look at Apple. It's already fell by the 100. It's heading to the 150. But if I look back at other bear markets and I go, okay, I see what this thing can do. It can obviously fall all the way down to 300, even lower, as you can see. But even in 08, it went all the way to the 300, and the dot-com bubble absolutely crashed and burned past that. But even if you say, okay, I'm just going to dollar cost in at every major moving average, that gives you an advantage right there, right? Okay, at least I have a plan here I'm putting in place, because the drops, it's still going to be a lot. But a lot of times, Apple's not going to reach its 300-day moving average. I mean, you're already down right now around, 27, 28%. And so, even if you did the 100, then you go to 150, it's only 4% down, right? And you dollar cost average in. Then it goes down a little more. You go 10% more down. Then it goes down to 300. Now, what is that? Another 18%, I believe, if I do the math. And so, there's a plan in place. And a lot of times, you get more bang for your buck. And in the long run, end up actually making even more money on your money, okay? And so, that's what I'm doing. It's the way I look at it. I mean, anybody else has to do that. And again, in the comments, there's so many ways to go about doing this. I'm trying to keep it extremely simple. Extremely simple. We're not going to get into Fibonacci levels and all this crazy stuff like that. And, there's a lot of things I could have put into this. But I'm talking about just for people who are looking to do, what do you do now? Besides watch your portfolio just drown, right? And maybe, and again, if you like putting a blindfold on, I mean, people have been doing it for years. And dollar cost averaging in just the whatever on the first of every month or whatever it is, that's fine. Because guess what? It's not wrong. The only wrong thing is to never ever invest, right? And so at least you're doing it. That's the way to look at it. But I would behoove you to take some time and just look and say, okay, can I come up with a different plan here to actually get more bang for my buck? That'd be great, right? And so, because it's compounding. That's what that is. You're going to have way more money in the long run if you come up with a good game plan. And so that's just me. Again, build your capital up, preserve your capital, come up with a better plan, distribute your capital. That ties into educating yourself. That's just me. Okay. And again, I share what I found, you guys, for free, I guess. I mean, I give it to you. It is what it is. Take it or leave it. But, I put a lot of research into it, and I enjoy that kind of stuff. And it's amazing what you can learn, especially nowadays. Remember, we got so many tools at our fingertips that we didn't have for years. Okay. And now we got them, and a lot of them are free. Okay. And so just want to put that out there because I got a lot of questions about there, guys. So hopefully you got something out of it. Hit the like, subscribe if you did. Let me know in the comments, if you got any ideas, if you got anything out of it. I'd greatly appreciate it. And I'll see you later.